Hello guys, welcome back to the channel. In today's video, I am going to be breaking down how to actually look at a chart and identify trade opportunities. I will implore you to sit back and watch this video till the very end, as there's so much value to get from this. Once I get into the chart, the very first thing I want to do is identify the flow of the markets. Where is the market headed? And because I'm predominantly a swing trader, I like to start out with the higher time frames, using the daily or the weekly time frame as my trend determinant. And then the smaller time frames, like the 4-hourly, the 1-hourly, 30 minutes and beyond, are my entry time frames. So basically, with the strategy, you have to scan back and forth between these different time frames. Starting out with the daily time frame, the first thing I do is identify what is the market doing. Where is the market headed? Very clearly, as you can see, volatility 50 index from the daily time frame is in a downtrend. Here you can see we have the markets printing us series of lower lows and lower highs, lower low, lower high, and then this being the most recent lower low. So we have the flow of the market is the downside. We have the markets very clearly in a bearish market structure. So safe to say I want to be looking at for selling opportunities, because the flow of the current, the flow of the market is to the downside. Clearly, as you can see, for every impulse, we have a pullback. For every impulse, we have a pullback. And then very clearly we had this sell-off, creating this lower low right here. And then as expected, we would expect price to have some form of retracement. And then that would be the time we look out for selling opportunities in line with the flow of the market currents. Market is very clearly in a downtrend. So once we have that impulsive sell movement, and then we start seeing price retracing back to the upside, we want to position ourselves for for a sell continuation in line with with the market's structure, with the flow of the market. Then you have to take notes. We have this level as our previous lower high that led to this lower low right here. This was our previous lower high that led towards the lower low right here. So now anywhere within this level the most recent lower high and the most recent lower low. When once we start seeing price what or retracing, anywhere within this level is what where we need to look out for what potential selling opportunities in line with what the market flow. There's something I usually like to do. I like to box off this level just to be very clear that what this is where I'm going to be looking for what sell continuation opportunities in line with the market flow, the downtrend. Because what once the market gets past this box right here, the structure of the market has shifted from what? From bearish to what? Bullish. So we are no longer going to be looking for what? Selling opportunities. That way, what? We now want to what? Change our bias from what? From selling to what? To buying. But for as long as price stays what? In between this rectangle area, we are still very much what? In what? In a downtrend, and then safe to be looking for what? Selling opportunities anywhere within these brackets. Now, there's something I like to do. When once you start what? Seeing price retracing, we need to start what? Identifying what? Areas of values, areas of interest. I like to call them what? Areas of potential trade opportunities. Those are zones or levels where I'm potentially looking towards getting on what? Continuation opportunities in line with the market structure. How do I identify these levels? Like I said, anywhere within this rectangle is where I want to identify what? My levels to what? Potentially sell from. And then what I do is what? I identify what? Places with what? The most touches. Places with the most touches. As you can see, we have this level right here. I have second touch right here. So if I box up this level, so if I box up this level right here, what do you get to notice? The number of touches we have from the level. So previously on 3 occasions, we had this level acted what? As a support. And then we're having to clearly see price break below the level. A broken support becomes what? A new resistance. Like I said, identify what? The levels with the most touches. That makes the level what? The key level. Like I've identified right here. So that's like, that becomes my first level. If I want to go a step further, I'll bust off this level also right here. Considering the fact that what we've had what? Multiple number of touches from the level. Like we said, what? Anywhere within what? This rectangle is where we want to identify what? Those areas of interest, areas of values. where we potentially want to what? Wait for price to what? Or retrace into and then look for what? Selling opportunities in line with the market structure. Having identified this first level, as soon as I start seeing price what? Or retracing, this is where I then want to what? Wait for price to come into the level and then look for what? Scale down toward the lower time frames, 4-hourly time frame, the 1-hourly time frame, and then what? Look for confirmations, entry confirmations, all right, at this or test of the level, scaling down towards the lower time frames. Also, there's something I like to do just to be very certain the strength of what my areas of interest. I like to stack up the confluences at the level. Clearly, if I bring in what's the 50 exponential moving average, you can see very clearly what just right at the level where I've marked up as what as my area of interest. We have the exponential moving average also what aligning. In this case, because what we're having to see the price below this level, the exponential moving average is expected to act as what a dynamic or resistance. So previously, the level is a key level. Previously acted as a support. And then we're having to see price break below the level. A broken support becomes a new resistance. Coupled also with the fact that what we're having to see the exponential moving average aligning very perfectly at the same level, acting in this case also as a dynamic resistance. So this is just all in a bid to what? Solidify the confluences at the level. Also bringing in the Fibonacci retracement tool from previous swing high to the most recent low right here. And see also what the level aligns very perfectly with what the 61.8 Fibonacci golden zone. Now, this puts every one of the odds in my favor. I can tell for a fact that what this is indeed a strong level to what to sell from because of what the confluences that are at play at this very level. Introducing the Fibonacci retracement, this level is aligning perfectly with what Fibonacci 61.8 golden level. Also, we're having to see what's the exponential moving average present at the very same level. Now, this is where I have to move what to the lower time frames. On price getting to what to my identified area of interest. This is why I want to move toward the lower time frames. Identify what entry confirmations. Entry confirmations. What are the reasons why I should be selling from this level? It's not enough to identify that what this is what area of interest. Moving down to the lower time frames, I want to what identify what entry confirmations. And some of these confirmations are reversal chart patterns, the double tops, the head and shoulder pattern. Also, we will be looking for rejection candlesticks, rejection and momentum candlestick closes. Once we scale down toward the lower time frames, at the retest of that level, we're going to be looking for rejection and momentum candlestick closes. Also, we'll be looking for what lower time frame structure shifts. So yeah, these are some of the things we need to look out for once we what move down toward the lower time frames at the retest of this level. Now you have to understand, guys, Whatever I'm doing right here on the daily time frame, you can very well do on any other time frames. The market is fractal. So everything that happens right here still very much happens on the 4-hourly time frame and then on the 1-hourly time frame also. Now this is the 4-hourly time frame, and then this is the very area of interest we had identified from what? From the daily time frame. You could choose to what? Scale down to what? Even lower time frames, the 1 hourly, the 30 minutes. But then what you clearly want to identify what? Every one of those what? Entry confirmations from any time frame of your choice. You can pick out any time frame of your choice. Preferably, I would say what? You would want to scan between every one of these lower time frames and then identify the time frame that gives you the best price action confirmations. I would stick with the 4-hourly time frame. As you can clearly see at the ratings of the level, guys. Now, this is where you want to pay attention to what? To what the price action says. And what do I mean by that? Clearly, what at the ratings of this level, we had ourselves what? The rejection candlesticks from the level. And not just that, we're having to see what? Momentum candlestick. Now, very evidently, there's something that comes to mind here. If you want to pay a very closer details to what? To the price action at this level, you would notice what? A shift in momentum. A shift in momentum from what? From buys to what? To sells. Now, what do I mean by that? You can see this range right here. From that low to this high, guys, it took price what? Let's count. 1, 2, 3, 4, 5, 6, 7, 8 candlesticks to what? Cover this distance. Guys, please pay attention to this. It took price what? 8 candlesticks to cover this distance. And this is a 4-hourly time frame. So that's like a day and over a day. It took price over a day to cover this distance. Upon what reaching the very same level. Can you see what happens next? With just 2 candlesticks, with just 2 4-hourly candlesticks, price had covered the very same distance it took what? 8 candlesticks to cover when we were what? Buying into this very level. What does this tell you? That what the selling momentum has stepped in. This is enough to tell, this is enough information to tell us that what the sellers have stepped into this level. And now, once you get to see what this momentum shifts at this very level, the reasons for this is not far-fetched. Very well, because what this is what a seller's zone. So once you start seeing what momentum candlestick close from an area of interest, that now starts what? Putting the odds in your favor. You can now tell for a fact that what? The chances of what? The market heading to the opposite side is very what? High. This tells you that what? For a fact, most likely what? The pullback has come to an end, because what you can clearly see what? Selling momentum has what? Has stepped in. The sellers have pretty much dominated the market already, because this is indeed a seller's zone. Like I said, it took us what? 8 candlesticks to what? Cover up this distance while we were what? Buying into this area of interest. But then it took just 2 candlesticks, 2 4-hourly candlesticks to cover that very same distance. This is a confirmation that what indeed what the sellers have what stepped into the market. And because this is a seller's zone, you shouldn't be surprised when you start seeing what? These momentum candlestick close from your area of interest. It's just a what? Confirmation what? that the level is indeed a potent level. Now that is that. And then also clearly, we add price what? Print us what? A chart pattern, a reversal chart pattern. We have the left shoulder, the head, and then what? The right shoulder. And now a head and shoulder pattern is a reversal chart pattern. This is what? Enough confirmation for what? Sell. This is enough confirmation for sell, coupled with the fact that what? I've identified what? The shift in momentum, like I clearly explained a few seconds ago. And then what? I also do have an entire video on how to trade key levels, how to trade synthetic indices using head and shoulder pattern. Now I'll leave a link to this introductory video, how to trade synthetic indices using head and shoulder pattern, somewhere in the description below. I would advise you go watch this video also, as that will throw more light on this. So yeah, very clearly what, like I said, I having seen what a reversal chart pattern at where at my area of interest is enough confirmation that what the market is very much ready to watch to start heading to the downside. And as soon as we add this retest of what the potential right shoulder, and then we add the momentum candlestick close from the level, that was where I add my sell entry confirmation. I'm currently in this trade. My stop loss just somewhere above. And then what? Like I said, I'm expecting for price to what? Or it tests the previous daily lows. Now, what comes to mind next is what? We have what price currently stalling somewhere at this level. We have quite some distance to go. You can very much still what? Look out for what? Opportunities to what? To ride the rest of these movements to the downside. How do we go about that? Just like we have done from the daily time frame, starting out with what? Identifying the flow of the markets. We'll do same right here on the 4-hourly time frame. So clearly what? The 4-hourly time frame, we had seen price what? Made the II right here. And then what? We had the II. And then what? We had this being the highest point. And now we're having to see price what? Shift the market structure on the 4-hourly time frame perspective from what? From bullish to bearish. So now again, what? We're very clearly what? Bearish on the 4-hourly time frame. So it's safe to what? Be looking at for what? Entry opportunities, potential selling opportunities, just like we did on the daily time frame. What then do you get to notice? We want to quickly identify what? Our price range. So this is our previous swing high right here. So we had this high, and then we had a lower high right here that led towards this shift in market structure. And clearly we can see price is stalling at the moment. Because we are currently testing what? A strong level. So as you can see, we had this level acted what as a support right there. And then again, we have also the level acted as a support right here. So we are having to see price coming to the level. And then what? This is where we need to start looking at for what? Our areas of interest, areas of value, areas of potential trade opportunities. Again, what do we get to do? We now get to what? Identify what? Levels with multiple price touches. Just like I explained, levels with what? Multiple price touches. So we have a level here. Here. So very quickly, if we bring in our rectangle 2, you can see what? That level is what? The strong level with what? Multiple touches. Now, take note, guys, we have identified what? The flow of the markets. We have identified that what? The market is what? The market is in a bearish structure using what? The 4-hourly time frame as our main time frame. So now, having identified the market structure, we then want to what? Mark out our what? Our areas of what? Our areas of interest where we potentially want to wait for price to what? To retest, to pull back into these areas, and then we would be looking for what? Entry confirmations to ride what? The downward, the bearish market structure. We have this level right here as one of the levels to look out for. And like I said, for now, this is what? The price range, with this level being the what? The most recent lower high. So as long as price stays below this level, we are very much what? Still in a bearish market structure, looking at the 4-hourly time frame and using the 4-hourly time frame here as our main time frame. So we could see price potentially what? Retest this level. And because what? Previously the level was what? Is support. And now we're having to see price break below the level. The broken support becomes what? Most likely becomes a new resistance. So we would consider this level as what? One of the levels to potentially look out for what? Selling opportunities also. What then if price takes out this level? Because we have this range of what? This price range. As long as price stays below this level, we are still very much in a downtrend. We could also consider the level right here. So potentially we could have price also come into this level, and then this would be a valid level to what? As soon as we test this level, you can now scale down to what? The 1-hourly time frame, because clearly this is the 4-hourly time frame. You don't want to go a time frame lower, or even the 15 minutes time frame, the 30 minutes time frame. And then at the retest of this level, you then want to look at for what? Entry confirmations to go short, because we have clearly identified that what? The market is what? In a downtrend. And then moving down to what? The 30 minutes time frame, the 1-hourly time frame, at the retest of what? Any of these levels, you then want to look at for what? Your chart patterns, your rejection candlesticks, your momentum candlesticks, your structure shift from the lower time frames, as these will be what? entry confirmations upon the retest of these levels to go short. Now, also, we could have price very quickly break below this level. And then as soon as we do that, the best level to potentially look for selling opportunities would then be this point right here. So, like I said, if we have a breakout of this level, the best level and the first level to look out for, let me use that, the first level to look out for a potential selling opportunity would be this first level right here. That would be our level. So if we have a break of the level and then we have a retest, then we'll be potentially looking towards to sell from this level. At the retest of this level, you scale down to the 1 hourly time frame, the 30 minutes time frame, and then look out for your entry confirmations, like I've explained, the chart patterns, reversal chart patterns, rejection and momentum candlestick closes. So then ride this all the way to our overall anticipated take profit somewhere at this level. Yeah, so that is what we are to be looking at for volatility 50 index. And I hope this helps you better identify the trade opportunities. I implore you to go over this video a couple number of times just to be able to get a grasp of what I'm trying to explain right here. If you find this video insightful, do hit the subscribe button. And also, guys, I did share this setup right here on my free Telegram channel. Every one of these movements, I called this move right from the potential right shoulder here on the free Telegram channel. I will leave a link somewhere below in the description also. You can do yourself a whole lot of good by joining the channel. Give this video a thumbs up, guys. Thank you for staying to the very end. See you in the next video.